Okay, recording this video on Sunday, the 27th of October, 2024. It says the weekend, time for another weekend futures market recap, where I go through 15 of the largest futures markets, and I show you what I'm seeing on my charts. Apologies, there hasn't been a video for the last 2 weekends. Went to the UK to see my mother, who's in a nursing home. That was beautiful to see her. She's 94, and I don't get to see her enough. So that was one of the weekends I was away. And then you might have noticed that we've got a refresh going on Emini-Watch.com, the website. I decided the site needed an overhaul. And as usual, I try to do too many things at once. We changed a whole bunch of pages on the site, where they lived, where they linked to, and we tried to refresh the theme at the same time. And I think it was just a little bit too much. So that's taken a while to figure out. Anyway, sorry, my headphones are a little bit askew at the moment. Hopefully that's better. So let us talk to the charts, because we've had the same pattern happening in the equities market in the E-mini for the last 2 weeks, and this is what it is all about, the RAMBO patterns at the highs. Here we go. So this is the last week and a bit activity. All amateur bars, super low average trade size, pretty small volumes as well, going through over the last week or so. And there's that little RAMBO pattern popping up right at the highs there. And I always say look for the lows of that amateur bar sequence to be taken out. And it was taken out, but it was taken out on low volume. That's why the market has just temporarily peaked. You can see here we had a similar scenario here where we just weakened a little bit from those amateur patterns, and then we eventually busted through because we didn't break the lows of this amateur sequence below here. But at the moment we're seeing weakness, and it is not just the E-mini, it is all of the markets. This is one of the views I suggest you pull up, because you can't look at the equities markets through the lens of just one index, the S&P 500. It is the biggest and I think the best to trade, but you can look at the equities markets in a whole range of ways. S&P 500, the NASDAQ, the Dow and the Russell, and then you can look at 3 different instruments: the futures markets, the index itself, and the ETFs. I don't subscribe to the data for the index itself for Russell, because that's expensive on TradeStation. So this chart is a gap. But you can see, in terms of all of the futures markets, here are the RAMBO patterns on the E-mini. We've got amateur up bars testing into that high on the NASDAQ. Let's bump this up. So here we go. So we had a high made. We fell off. Blue professional bars stepped in. And this is an under the lip trade. This is amateur bars coming under the lip here. That's not good. And then we've got RAMBO patterns here on the Dow, bang, and then we've got the Russell, similar things, amateur bars, but they didn't break the highs, so that's why we've not got a RAMBO pattern there. We've also got it on the ETFs. We got the SPY, the Qs, diamonds, and the Russell here. So we've got RAMBO patterns, amateur bars at the highs there, not on the Dow. The Dow's been the strongest for the lot, interestingly enough, and the index is not so, but that's the story. What's happening at the moment is this push into these highs is being led by the amateurs. And as we get closer and closer to the US election, I'm in two minds. About 2 or 3 weeks ago, I was convinced I was just going to go flat on equities. Got a long-term position on equities that's been open for, I think, about 2 years now. And I was wondering whether I should just flatten that leading up to the election, thinking that there would be chaos with the election and we wouldn't get a decision until December, January. But lately the news has been pretty bullish on, at least directionally, that the market's not giving a precise signal to say get out, go flat. And so at the moment I'm just mulling that I might keep that long equities position on. But we'll see. We'll see in the next week or so whether that's something that should be considered or not. Anyway, let's go down to the 135-minute time frame. Here we go. The highs, those RAMBO patterns pushing up into those highs. We got to 5,900, which is excellent. And so we just weakened from there. But you can see the trailing stop on Beta Pro Am is miles away because we haven't had blue professional bars. They were active last time, was down here at the lows, and that's why the trailing stop is down here. We have pushes with the market. The trend is not over. All we're saying is that this latest activity is just being led by the amateurs, so it's suspect, and we've had some weakness from there. And so what we'd expect to find is this to drop down to maybe a blue professional bar, some nice signal, a cyclical signal, a professional bar signal, some signal to hold us at that point. It might be a bullish divergence. You can see here we're setting up a possible bullish divergence on better momentum. We'll see in the next week if we get that. But this trailing stop means that backgrounds in red, we're still in an uptrend. All we've done is we've just pushed past these highs and cyclical resistance patterns and just found that we've run out of juice. 45-minute chart. There we go. There they are again. Here's the trailing stop, a little bit of a ways away. This is the level 5800, almost even. That's super critical. If that gets broken this week, we'll turn into a downtrend here, confirmed downtrend, and then we'll have to wait until we get a cyclical support coming on the highest time frame there. But nothing to show that that's going to happen. We'll just have to wait and see if that breaks in the next day or two. 15-minute chart. Here you can see there's a lot more activity going on. So from those RAMBO patterns last week, we sold off pretty hard, but we had exhaustion sell bullish divergence. We got caught. We came back up. We didn't have blue professional bars, the highs, taking profits. We had a little bit of a testing amateur bars week there at the beginning of the week, and we dropped off from there. But at these lows, we're making exhaustion sell, so we're trying to bottom. But this is in the wrong place, these blue professional bars. If this has been a nice neat bottom at this point here, the blue professional bars would have come in with the exhaustion sell down here. We'd have had amateur bars testing at this point, and we'd have broken into a healthy trend. All we've got is strength at the moment, but it's not a proper change in trend there, and we'll see that as we go through the time frames, and that's why this weakened here. I'd look at this as gaming the market up, and then they get us up here, and then they sell it down at that point. At some point, they'll come in blue professional down bar, but not yet, and that doesn't look good. We could be breaking that support, and around, again, this 5800 level looks pretty key. And then 13,500 2-bar chart. Let's look at this. So here are our signals over the last week and a half. So amateur bars at the highs with RAMBO patterns, sign of weakness, nice sell-offs at that point. And here's the big pro bars. So this is when you get a blue professional bar with a background in blue. That means that's a super high average trade size. It's really important. And that was a stair-step trade. We'd broken into a downtrend. We bounced. We hadn't seen blue professional bars at the lows here. They came in on the retrace there. Stair-step, the trailing stop down. And because that's super high average trade size, that's really important. And we weaken from there. We come back, test into that zone, and they come back again. You can see here the background's in blue, and they sell it down at that point. And then this is the same pattern on the 15-minute chart where we get blue professional bars mid-sequence. We come back to test blue professional bars, and we take off from there. And at the end of the week, we're back into that same zone. So we've got blue professional bars in at that zone here, and we've tested once, and then here's the second test. We didn't see blue professional bars at the lows here, so for me that's not a healthy change in trend, and so maybe they were just gaming it up. We'll have to wait and see. If this breaks Sunday, Monday on the 13,500 2-bar chart, that takes us into a downtrend here. And can we see that in terms of cycles? Yeah, so here we go. We're at, again, 58.34 is a critical level. If we break that, we're breaking an intermediate support level, and we've got weakness at the moment. We're heading down on the 13,500 2-bar chart. So all of that for me is just suggesting that we're going to have a rough couple of days, Sunday, Monday, Tuesday, until we catch. 5800's absolutely key. It's an area we bounced before. If it holds, the next time we test into that, all well and good. We can bounce from there, but if it fails, that's not good. That might be prescient for the next 10 days or so. So there we go, some thoughts on the Emini chart, and let us rip through the futures markets just to look at this highest time frame chart. Just a reminder, we look at two time frames, the 500 2-bar chart in the case of the euro and the 1500 2-bar chart, factor of three different, and we look at the market in two different ways in terms of volume with better momentum, better pro-am, with the amateur and professional activity, and then the volume momentum, and then we look at it in terms of price cycles and trends with better sine wave. So this for me is the most important chart because it's showing the professional activity and it's on the highest time frame. So this is the one I like to zero in. You can see the euro, bang, we've been selling it down. Here's a nice little classic stair-step trade. So we retrace here with exhaustion buy, bearish divergence. On the way down, we never saw exhaustion sell. The trend is not over until we see blue professional down bars and exhaustion sell. Now, this week, midweek, we did get that. We got blue professional bars at the lows here with an exhaustion sell pattern, and we've started to rally from there, but it's weak. We've come back there. So we've got this downtrend in the euro happening. Let's see if that catches this week and rolls around. British pound, same thing here on the retrace. Here's the big pro bars over the last 2 weeks. So the background's in blue, the bars are blue. This is super high average trade size. So they sell it down, 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 come back up, they game it back up, and they use that activity. It's within that blue professional bars zone, which was really wide. We gamed it almost all the way back up. Blue professional bars, super high average trade size. I mean, they come in here, they game it up, exhaustion sell, bearish divergence, and comes down again. Amateur bars. The blue professional bars were not on the way down. We've not seen exhaustion sell here. We've had exhaustion buy on the retrace, and this has led to the weakness here. We've just run out of buyers at that point. We're coming back down. So British pound not looking good. Aussie, I'm short Aussie at the moment, have been all week, which is good. Same thing, backgrounds in grey, down, down, down. It didn't have exhaustion sell at this point in a bullish divergence. Yes, we bounced off blue professional bars here, but it didn't go anywhere, and we just reversed, gone around, and no exhaustion sell yet on the downside, and we're sitting right on 66. So super important there. Not much in terms of blue professional bars coming in at all yet on Aussie. Japanese yen. Here we go. Down, down, down the last 3 weeks. And here we go. At these lows, no blue professional bars, no exhaustion sell. We've just gamed this up. Exhaustion buy, bearish divergence. So this is short covering rally. Amateur bars here, getting wrong-footed, thinking that it's a change in the market. But no, we're reversing around. It's weak at the moment. The trailing stop is miles away. Background's in grey. Japanese yen is weak until we see blue professional bars coming in on the way down. And 10 years. 10 years trying to roll around, but not changed. So a bit of an uptrend, changes into a downtrend, a little bit of strength here, but note, there's no blue professional bars at these lows. Exhaustion sell, bullish divergence, but it's miles away. We've come back down now at the end of the week. Okay, that's a little better. So blue professional down bars, exhaustion sell, big pro bars coming in there. That's starting to make a little bit of a bottom on the 10 years. So let's see if that rolls. And gold. Whew, gold just keeps on ripping higher. What are we up? We're up at 2770 up here, and then we've weakened from there. We come back up to test into that area. So let's see if that starts to weaken. A little bit of an under the lip type trade there on gold and silver. Silver did weaken though. Topped out here. Blue professional bars forcing it up. I suppose that's exhaustion buy, bearish divergence, and we rolled around from there. And the blue professional bars have come back in here to test, so that's okay. So we're in the dark at the moment. If that's going to hold, that's good. Maybe look for a stair-step trade on silver to continue higher when blue professional bars stepping on the retrace there. Bitcoin, no blue professional bars at the highs. They didn't come in at the lows though either, at 59,000 down here. So I don't know. I didn't like that for a bottom, but it ripped higher, $10,000. So that's unbelievable. But now we've got blue professional up bars at this point. The test back up. Let's see. I can't say on Bitcoin. Crude, there we go. There's a nice bottom exhaustion sell, bullish divergence. Big pro bars come in here, right at the low, 68.50 or so. Maybe that was around 68. And then we start to rip higher. And blue professional bars, exhaustion sell come in here. So we've strengthened now. The background's in red. So crude's looking better. Natural gas did bottom nicely. There we go. Exhaustion sell, whole pattern, a bullish divergence, and copper. Only one blue professional bar down here at the lows. They did come in on the retrace here. The background's in red. So let's see. Exhaustion sell, bullish divergence. Maybe trying to get the move going. If it gets through 440 again, maybe it's going to continue higher. But it would have been nice to see, because we had all these blue professional bars selling it down here. So we had this retrace move. It was a stair step. Blue professional up bars come into that, exhaustion buy, bearish divergence. That's a classic under the lip type trade. And then blue bars come in here. So super high average trade size, all those professional activity, selling it down there. Because that amount of activity, that large number of professional were selling it down at that point, you'd expect that to be the type of pattern that you see at a bottom, that amount of blue professional bars. And we had one down here and one or two on the retrace here. So I don't think it's all over. What I'd be looking for is the next retrace to see where those blue professional bars come in. Do they come back in at 455 and then sell it down at that point there? Let's just look at the, so it's trying to bottom at this point here. Here's our pullback to end of trend on the highest time frame. This is second cyclical turn after end of trend on that highest time frame. Signs of strength. It's trying to hold. If it gets back above 440, it'll probably break a little bit higher. But let's wait and see if that's just a false move into that next area where the blue professional bars step in. Okay, corn. Quickly, corn rallied, topped out, selling it down at this point. Background's in grey, so it's weak. And soybeans, these are big pro bars coming in on the retrace. That's a stair-step trade. We break into an uptrend, the big pro bars coming at the bottom here. No blue professional bars here or here taking profits. They come in on the retrace. That's a stair-step trade. So I'd look for that to strengthen, get back above the 900s and 90 and a bit. And lastly, wheat. Wheat, here we go. We've got some big pro bars coming in here at the lows. We've tested and tested and tested, but this proper rally hasn't started until we see blue professional bars on these lows like this. So are we going to get through 572, break into an uptrend? That'll be interesting on wheat. So here's a similar type move. We're selling it down. That amount of activity was selling it down at that point. They've come back in now and maybe picked it up. So let's see if we get a reversal in wheat this week. So there we go. That was helpful to you. It's going to be an interesting couple of weeks. It might go a little bit quiet leading into the US election. I suppose that's a possibility because it's up in the air, and I think it does determine to a large extent whether the market's going to feel good. But we've rallied pretty hard with news that Trump is doing well in the polling, and so that's pro-business, pro-markets. And so let's see if that continues. It's going to be a doozy, and who knows whether we'll get a decision after election night. It might take some weeks or months. Anyway, I hope your trading is going well. Looking forward to this week's trade.